Well, Hurricane Irma was certainly a devastating storm, but the cost to insurance companies is expected to be less than first thought after Miami, of course, a more expensive real estate part of the country, has kept a direct hit. One estimate puts insured losses at about $20 to $40 billion. That's down from as much as $50 billion. Joining us now by phone from Tampa is Chip Merlin. He's an insurance expert and disaster claims attorney. Chip, good morning.
Good morning to you.
So we're trying to kind of get a sense, I know it's early, of what the kind of impact is going to be here for insurance companies, but $40 billion, $50 billion, I heard $90 billion this morning on another network. Where do you think we're sitting?
And I've heard everything from $10 billion on the low side up to 90 as I'm looking through things. And that's different than what the total amount of damage will be. Many times for the insurance companies, that's insured damage. And a good portion of the insured damage is going to be picked up by the National Flood Program. So I think that the overall hit to most of the carriers that are doing non-flood related type work is going to be much lower than what it could have been had that storm gone up or down either the west or east coast of Florida.
So the coastal areas, which did get a break, we should say, certainly that's a financial break as well. But let's talk about the cost to businesses as well, because, you know, there are some reports that as many as 50% of homeowners, business owners just in Florida did not have flood insurance.
Well, and that's true. As a matter of fact, over the last few years, we've seen a decrease, I think in just the last 2 years, of 15% of the people that had flood insurance through the National Flood Program had dropped their policies because it had been so long since we've had a major storm that really caused a lot of flood damage. And frankly, we got really lucky because it could have been a lot worse. Even though Miami took the brunt of it and the Keys and certainly down in San Marco Island, we were looking at a possible historic loss up and down the West Coast. Had that storm stayed off 5 to 10 miles like was predicted by the National Hurricane Center. So as what Jeff said just a little bit earlier, we dodged a big bullet here in the state of Florida.
You certainly did, but at the same time, you know, the reinsurance industry seems to be what's going to end up on the hook for all of this, not just insurance companies, those direct carriers, but the reinsurance companies. There was a little bit of pressure on those companies that trade publicly yesterday. Do you expect that to continue, or do you think that Wall Street's a little too nervous about this group?
No, I expect that they should be nervous, especially the Florida private market, the smaller markets, the smaller carriers in Florida that have been developed since Hurricane Andrew and the 2004 storms largely rely upon the reinsurance market to take up these large catastrophic risks. And if you go over to the private flood market, was just starting in Florida, I hope it doesn't go away because it's almost completely done with respect, or completely dependent upon the reinsurers.
Chip Merlin, we appreciate you joining us this morning via phone, especially coming from Florida, which is trying to recover. Thanks, Chip.
Thank you.